Hi. 8 months ago, I mentioned that Terago, the symbol is TGO in Toronto, may be worth your sleuthing attention. To recall, Terago is a Canadian small cap with a national license for 5G spectrum, good for wireless communications. I call this license the equivalent of waterfront property, because just like waterfront property, no one makes any more spectrum. But there are two more reasons I use this analogy, both to do with valuation. The first reason is, just like real estate is valued in dollars per square foot, so can spectrum be valued, but here the unit is in dollars per megahertz pop. That is, how much information you can transmit via this spectrum to all the population in the licensed area. Then, how much you pay for a unit of this transmitted information. The second reason is derived from the first, and this is the ability to do comparative valuations. In real estate, sales in adjacent areas to your property can give you a ballpark for a value of a similar property nearby, if you know its square footage. And so it is in spectrum valuation. In the case of Terago, there's lots of information and data for comparable spectrum sales, both some time ago and more recently. The first data relevant to this case is 3 years old. This was the sale of StrikePath, a US national spectrum licensee owned by a company that used it only for communications by wholly owned cab companies. In essence, parking the license until it could be sold in the future. However, the US FCC, the Federal Communications Commission, said, nah, you can't just park the spectrum license. You have to really use it or you lose it. Finally, the FCC mandated that the license had to be sold within a year. So StrikePath put itself into auction and was sold in pieces to a few large telecoms, benefiting the national interest. What did StrikePath stock do? It rose from $30 a share to more than 180 in 1 year. 6 times in 1 year. Nice. Sure is. Fair disclosure. I had owned a bit of it then, and that's why I was looking for spectrum licenses the last year. However, this value of StrikePath was comparable 3 years ago. What about today? Well, the second valuation comparison is today's frequent auctions of spectrum sales, which take place in the US almost every month, with the resulting prices being made public. And these prices keep rising because, yes, you got it, they aren't making any new spectrum anymore. But how to translate this price to stock value? Not easily. The auctions are for longer wave spectrum, while Terago's is short wave, also called millimeter wave, where more information can be squeezed into the spectrum, but up to now, not as easily. But in the future, with more technology, perhaps the value will be similar. So if you take the latest valuation from these auctions and multiply by the area of Terago's license, most of Canada actually, you would get the baseline real value of Terago's stock based on the spectrum and compare it to today's stock price of about $6 Canadian per share. Now, what is the true value per share according to spectrum? I will only say that the estimated value today is higher than it was on February when I mentioned it as a sleuthing target. But what is this value? Again, no, I won't tell you. To know this number, you'd have to do the sleuthing work yourself. But what did the stock do during these 8 months? Well, practically nothing. It was $6.75 when mentioned here in February. It fell below 5 and recently rose a bit above 6. In a word, crickets. However, in this case, that last word is particularly appropriate because some crickets did get into the stock. And very interesting cricket, that is, fighting crickets. What do I mean by that? Well, in my book, The Sleuth Investor, I noted that the best investment information must have 3 attributes. The information has to be true, has to be significant, and has to be exclusive to you. In the case of Terago, the easily obtainable information, comparative valuation based on recent auctions, location and size of megahertz pop, that can be easily picked up from the corporate filings. That is, easily if you are willing to spend the time and have access to a calculator and pen and paper. Then, whether it is true and significant, you'll have to judge for yourself. And if you want to be extra sure, just find some telecom engineers and ask them. Pay them if you have to. It could well be worth it. But what about the third component, the exclusivity of your information? Because surely the above would not be exclusive to you, even though admittedly the number of people who would bother to look at it is low. You see, most investors, so-called investors, prefer to trade by charge or via stock tips, which is information known to everyone on the internet. No exclusivity there. So, how about sleuthing the company's people? Yes, indeed. That's where the edge of exclusivity often comes in. In the case of Terago, it is a group called EdgePoint Investment, which invested $50 million Canadian in Terago in April, mere 2 months after the stock was mentioned here. I invite you to check the background of their people. So I won't mention names here, but I will give you a few general points just to give you a flavor what people sleuthing for exclusivity is like. One of EdgePoint's senior people was before a chairman of an aggressive and successful activist investment company called Enterprise Capital. Over the last 20 or 30 years, Enterprise Capital had bought into several undervalued Canadian companies and then aggressively pushed them to improve and finally sold them for much higher prices to larger companies. These acquirees include Spar Aerospace, Moore Corporation, Creo, all boosted by the work done by the silent, aggressive crickets, some of whom have bought into Terago. Just check it out. Now, what have they done up to now? While Terago's stock has been dormant, the aggressive inside crickets have been active. There's a new CFO, new board members, and an expansion of the wireless network using the 5G spectrum. Why is the last important? Because Terago has a big cost advantage due to 5G, so it has the potential to peel big chunks of wireless market share away from Bell and Rogers, the two Canadian national wireless networks. They are basically duopolists. Can Terago do it? Again, I won't tell you. This is up to you to find out your own sleuthing. I can only say that it might not be a bad use for your sleuthing time. And oh yes, one last point, which admittedly is speculative. You probably heard about the US fight with Huawei, the Chinese giant telecom that allegedly has connection to China's national intelligence and therefore can listen allegedly to whoever is foolish enough to install its equipment. Huawei's CFO, who is the founder's daughter, has spent 3 years in house arrest in Vancouver, Canada, because she allegedly sold sanctioned equipment to Iran and lied about it. She has just been released after China threatened to execute 2 innocent Canadians unless she is let go. Well, she was just let go, but the US war against Huawei remains. Now, why is this relevant? Bell Canada has been a Huawei customer. A small one, but still a customer. And the US, I'm told, doesn't like it. The US favors Finland's Nokia, which is one of the 2 big Western 5G equipment producers, which could be a strategic counterweight to Huawei. Terago, incidentally, works with Nokia. See? So here is the speculative part. I would bet that the technical attaché at the American consulate in Toronto, who may or may not be part of the spook's residence, probably knows Terago well and follows its progress keenly. In other words, can it be that it's in the American national interest that Terago, a future Nokia user, succeed at the expense of Bell? Just so as to make the telecom network of Canada, the US northern neighbor, less dependent on China. In my opinion, it's a non-zero possibility. How to find out if it's mere speculation? Maybe if you talk to telecom engineers, they might speculate about it too. So, what is the conclusion? Simply, the deep sleuthing of key people behind the company can reveal information that's exclusive enough to complete the holy triplet of true, important, and exclusive. So, all right already. Is Terago a buy? I can just hear you asking. For the last time. As always, the above stock mentioned is not a recommendation nor a tip. I only mentioned the stock as an example through which you can learn the art of sleuthing. If you want to learn this art more thoroughly, Go buy my book, The Sleuth Investor, where you can find more real-life examples that would make you a better sleuth, which of course means a richer one. That's all for today. Let me know in a comment below what you think of the holy triplet of investment information. And if you like, please give it a like and subscribe, then tell all your friends so they subscribe too. I'll see you next time, and meantime, thank you very much for watching.